All right. So I know it's late in the afternoon and people are getting tired, but I do encourage everybody to try to pay attention. We actually are very fortunate today to have one of who I consider one of the most successful, highly prospective, and strong, hardworking venture capitalists in Silicon Valley, Tim Chang with Mayfield Fund. So Tim, welcome back to Korea.
Thanks for having me. It's always great to be here.
You know, you and I talked about this over breakfast, but I think obviously you're one of the very few Silicon Valley-based VCs that actually has a perspective and actual deal experience in Asia. Obviously, you've done direct investments in China. Your fund, Mayfield, also invests in India. You've been to Korea multiple times for partnerships, and then you worked in Japan a long time ago. So I think I'd like to start out by asking your perspective on what are some of the trends that you've seen in Asia that has proliferated and obviously has influenced startup companies in Silicon Valley?
That's a great question, Jay. It used to be we would see a lot of startups in Asia try to copy US business models, but then we started seeing more innovation from Asia. So you could argue that all of the free-to-play games, freemium, in-app purchase business model, that all came from Asia, from China, Japan, and Korea.
Right.
But also now all the messaging apps, the craziness around messaging, that's actually all from Asia. It's specifically WeChat, Line, KakaoTalk. It's those companies that have innovated the space. And now in America, we're trying to copy Asian companies because Asia's been doing mobile longer than the US has, but the US is now a mobile-centric country.
Right.
And you have whole new business models in Asia that don't even exist in the US. Companies like YY, you know, that are multi-billion public
Right.
companies, that we have no analog for that in the US.
Exactly. I mean, we're investors in a messaging app company
Yeah.
that I will not name, but they have blatantly copied and tried to copy some of the successful messaging apps in Asia like Kakao and Line.
Right.
With limited success actually, but they're making steady progress. So switching gears a little bit, because I'm sure the audience here is very interested in the latest and greatest of what's happening in Silicon Valley these days. So let me try this. So I'm going to throw out specific themes or technology trends, and I'd like you to respond with your immediate reaction of whether or not you think this is a flash in the pan or something sustainable that can create real value. Okay? All right, so I'm going to start with virtual reality.
So we had Oculus Rift, right?
Yep.
Which was a huge outcome, and that's going to keep valuations very high in the space. But let's not forget, that's still a very hard business to do. As much as I love Oculus, they didn't make any revenue. They didn't really ship a real product yet. So it's hard to point to Facebook.
Although it doesn't matter, right?
Sometimes, that's right. But there's only so many companies that can pay $2 billion for a pre-launch company. So we're seeing tons of virtual reality companies come up, but I don't think the challenges of doing a VR company have gone away.
Right.
You have chicken and egg of hardware and software, so it's still going to take some of those challenges, right? So I'm worried that that's still a little bit early.
Okay. Okay, so that sounds like not so sure. Next topic would be, and this is an area that I know you know well, and we had some really representative, great speakers today in Sunny and Eric representing Misfit and Pebble, which you moderated. So how about the overall theme around quantified self?
Yep.
Do you think this is a long-term trend that can really enhance value or a flash in the pan?
I think so. Quantified self also encompasses wearables, but also self-tracking apps, right? Like MyFitnessPal and Lose It and other things. But what I think is going to happen next is people are going to realize the best business model is not just selling devices, but actually moving towards personal coaching subscriptions. Because the real promise of quantified self is not tracking, but coaching, improving your life and becoming a better human being, becoming the person you want to be. Whether it's sleeping better, eating better, exercising better, being more mindful, being a better parent, all those sorts of things. So, you know, I'd invested in this company called Lumosity before in San Francisco. They're now the world's biggest brain training training company with a subscription business model, over 1 million paying subscribers who stay on for almost 2 years at a time. And that business model is very beautiful if you can scale it. So I actually think quantified self will evolve into more of these subscription style self-coaching type of businesses.
Right. Now this one I think I have to agree with. And again, you know, you vote with your dollars.
Right.
And so you've invested in Lumosity, which is doing extremely well. We also invested at Translink in a company that you know well called Noom.
Oh yeah, right.
Which is doing very well here in Korea,
with
as
subscriptions
well as
too.
Japan.
Right.
And again, providing the Weight Watchers coaching aspect beyond just tracking steps, tracking diets.
Right.
They provide coaching and encouragement, which over the long run I think is differentiation.
And that's human-powered stuff, right? So it's a combination of technology plus human-powered or sharing economy. Yeah.
Okay. The next topic is an area that I'm personally quite interested in, and I think you and I talked about this. But you know, there's a lot of interest around this new area related to robotics. And you can include self-driving technology in that bucket. You can include potentially humanoid consumer-facing robotics, industrial robotics, and everything else. And I know you actually have some background in this area. What is your perspective on opportunities for startups in that space?
I think it's actually a really good area now. I had invested in a company called 3D Robotics. Chris Anderson, who is the editor of Wired magazine, and they've become the leading autonomous quadcopter, multi-copter drone company in the US. So here's the basic premise. Robots used to cost you millions of dollars or hundreds of thousands of dollars, and only industrial or military could afford it. But once you drop robots down to $1,000 or less, any hacker, any household can afford them, starting with iRobot and Roombas, but now also, you know, with the Phantom and the 3D robotics drones, every household can afford their own personal multi-copter, which is really crazy because that means there's so many applications that open up. And so what I like about that is now, instead of depending on enterprise sales, consumers and developers and hackers can adopt it, create hundreds of applications that you never dreamed about. You can possibly be the platform company, let consumers do the innovation, and then ironically, enterprises start chasing that space again, because some of those applications will be useful for enterprise. So it's almost like a reverse bottoms-up model. Instead of selling to the top, now you start with consumer adoption, and because the price is so low, applications pop up, enterprises see that and say, whoa, we could do that. So I think that's a really interesting opportunity.
I agree. I think there's going to be a lot of opportunities across that spectrum.
Yep.
The next and last topic that I'll ask you about, and I kind of already know your position on this, but I'll ask you anyway.
Yep.
So shared economy, services. What's your perspective on that?
Oh, I love this area. We're just getting started, and the reason I like it so much is that the business model is there from day one. These are services all of us use every day, multiple times a day, and it's an opportunity to take an offline service that kind of sucks or has a lot of friction and make it feel delightful, feel magical, like click one button on your smartphone and turn real life into like a remote control service. Like the first time you ever used Uber, it felt like that. And now we're starting to get Uber for food, nutrition, fitness, massage, baby care, everything possible. So that's dozens of startups to go build in those areas around the world.
You know, Tim, on that, let me ask you a follow-up question because you know, we talked about the example of these companies trying to expand globally.
Right.
And for the audience, obviously, who are obviously in the Korean market, and for entrepreneurs that are considering similar models in Korea, how do you think these shared economy models will scale in specific domestic markets that are only a fraction of the market size of the US, like a Korea?
It's a great question. So there's a famous story about the Samwer brothers in Europe. They would spot the business models which were working in the US and quickly clone them. They would adopt them for the local markets like Germany. So they did StudiVZ, right, and Zing and all these companies that all did really well, recognizing that the US companies probably couldn't get to Europe before a local company could sprout up. Now, I know a lot of Korean entrepreneurs, some of the ones here, are thinking of bringing their service to the US or launching products for the US market. But I would actually encourage them, think differently. Think of how could you be like Samwer Brothers for Korea, like what Coupang did really well, right? I think they did an amazing job with that. Could you pull a Coupang-like strategy and become the Airbnb of Korea or the Uber of Korea and do it better than the US companies could and more quickly? If you establish the leadership position, because these are often network effect businesses, when those big US companies come to expand internationally, they'll have no choice but to buy you often. Because even Uber's trying to launch in Korea, but it's not quite the same. Every local market has some twist that's a little bit different. I think Groupon learned this the hard way, right? And so local entrepreneurs are always best suited to figure out the particular dynamics of the local market and build a local strong market leader.
Right. No, I totally agree. And I know our friend Han Kim from Altos Ventures is a strong believer in this as well, that Korea, in fact, is not necessarily a small market.
Yep.
And then it's been proven time and time again where these big, giant US-based tech companies try to come into a market like Korea, and they are trying to basically run the playbook that they have developed over time in different markets and don't have the ability to adapt to that local market.
That's right.
And thus fail.
That's right.
And they always will fail versus a nimbler, local, domestic competitor that understands the market and is willing to adapt.
That's right. In fact, our friends at Infinity Venture Partners in Japan prove this is the case. They replicated great models in Japan, and most of them have been hits for them because they were doing seed stage deals, almost incubating these. So I could see somebody doing this in Korea very systematically.
Right, right. You know, one of the things that obviously is another hot topic in the entire tech community is the IPO of Alibaba.
Right.
And because I know you've done a fair amount of work in China and still follow it closely, I mean, there's massive impact that these big Chinese tech companies are having, not only in their domestic market, but across Asia and also now into the US. What's your perspective on that? Do you think that that is something that is now here to stay? Something that now the world's tech community is almost divided into the Western big giants and the Eastern big giants?
It's starting to become like that because what's interesting is Alibaba is like a parallel universe, Amazon plus all this other stuff baked in one, right? Of course, they could try to enter the US, but beyond that, the rest of the world is such a big market. So just like Huawei, of course they tried to go into the US and telecom equipment. Instead, they found so much traction in places like the Middle East, Africa, Latin America, other emerging markets. What I would be most concerned about is when giants like Alibaba actually hit those markets first. Because imagine if they become the Amazon for all those emerging markets way before Amazon ever gets there. And if they can do it at a lower price and lower cost structure, then potentially US companies at the higher prices, higher cost structures can't even compete outside of that. So it's kind of a global battlefield that we have to think about. Yeah.
So this is just a heads up for the audience. So I'm going to ask Tim a couple more questions. I'm going to make sure we leave time behind. And for those who remember last year, I actually challenged the audience to actually at least come up with a couple of questions. So I'm giving you a heads up, trying to buy some time, but hopefully there'll be some questions from the audience, at least a couple that I can ask Tim. All right? So Tim, I know that over the years, as you've been in the Valley and you've been a great friend for the Asian entrepreneurs and also the Korean entrepreneurs. Over the years, you've seen and met many of these entrepreneurs. What kind of advice would you give the Korean entrepreneur that is coming out to Silicon Valley to either try to enter the US market, to hire people, or raise capital?
Yep. For a while, I used to see a lot of Korean entrepreneurs who did really well here and then want to expand to the US. I think the earliest example was I got to work with some of the people at SciWorld when they were trying to do SciWorld US. But just like you talked about, going from Korea to US was totally different. It was almost lost in translation, and SciWorld ended up getting adopted not by the cool city hipsters, but instead by the Midwest conservative Christian types. And they were confused and totally shocked that that happened. So I wonder if a better idea is for sometimes Korean entrepreneurs to think about, almost the reverse playbook of how they can take some of these models that work well in the US and build the next Coupang or something like that. For the Korean entrepreneurs who do want to go to the US, though, I think they should focus on being mobile first, because that's the one advantage. The prior generation of Korean startups that kind of tried to come into the US, they were PC desktop, and they were often PC download. And the U.S. just, they don't do that. But now things have changed. The U.S. probably is more like Asia, that we're mobile first. Everyone's on a smartphone, Android or iOS, and so a mobile first app is a good way to do it. There's a lot of excellent Korean entrepreneurs who have mobile gaming backgrounds, so they're used to working in native apps as well as converting free users to paid, those sorts of things. I'd love to see some of the former mobile gaming talent in Korea shift to other areas like these mobile to offline services or e-commerce or other kinds of businesses too. Not that gaming's not good, it's just that I think the gaming market, not quite as sexy as it used to be because of the difficulty in getting distribution power.
So thank you, Tim. Are there any questions from the audience? And I know we might not have the infrastructure to support that, but if somebody's willing to stand up and shout out a question, I'll make sure it gets to Tim. Anybody? Please. Please, come on up.
Come on up.
Sorry. Thank you for your talk, actually. I'm Mauro Pelosi from Finland, from Europe, actually.
Nice to meet you.
Labs. I just want to know if, when considering pre-revenue companies, VCs, some ask a detailed business plan and some ask less details and 4 or 5 year projections. What is your suggestion for a pre-revenue company that has to present a business plan to a VC, actually? Should we have 4 or 5 years projections or even less details are fine, actually? Thank you.
Well, I think both Jay and I can answer this. From my perspective, if it's pre-revenue and sometimes maybe pre-launch even, honestly, the one thing a lot of us really look at is the team. And so if the team has credible background, for example, they were founders at another company before that did well, or maybe they were VPs at another startup that did well, often the team background is even more important than a detailed business plan or Excel spreadsheet. At least for me, honestly, I don't even look at the projections because we don't know what's going to happen in year 5. I'm more concerned, what can you do in the next 18 months? Because it's really about raising the next round of funding, right? But Jay probably has some good...
Yeah, no, the same for me. 저 한국 분 질문하실 분 없으세요? 네, 저 위에 하나 있습니다.
Do I have to make a question in English or Korean? I can speak both. Which one is more appropriate, I guess?
Well, if you ask in Korean, I'll need a translator, but...
Okay, I'm Jun. I'm from Korea, and I went to Purdue University and spent about 10 years in US, and now back in Korea.
Yeah.
And trying to start a company that makes media marketing tools for the small startups, especially internet companies, which make applications. For those little small companies to get awareness of the venture capitalists or the investors, what is the pros and cons of one meeting with key people, having a presentation, giving a presentation, and meet in person, or the other way of raising buzz with social medias or the blogs and things like that? What are the pros and cons of 2 different ways?
Sure, great question. I'll also ask Jay to weigh in on this too, but there's a few tips I would give to you. For investors, we each often see close to 1,000 companies a year, and so if you just email somebody, chances are they won't read it because there's too much to look at. One of the ways you can guarantee an investor will look at your presentation is if there's a respected person who makes the introduction for you. So can you find out if you have a friend in common, or maybe another angel investor they respect, or another entrepreneur that they work with? This is called the warm intro. Warm intros are almost 100% the best way to make sure someone will see your company. Second, if you are getting a lot of buzz in the tech press, like TechCrunch or the equivalent in Korea, you'll definitely get a lot of inbound. You'll get guys like us calling you. And so that kind of PR is really good. So those are good ways to do it. In the US, we now have AngelList, and you'll hear from Naval later, but those kind of platforms are also very effective. When you have your profile on AngelList, suddenly everybody can see it, and you can see all the proof points and the people who know you. And Jay might have some other specific tips as well, but yeah.
One last question right up here.
Actually, I had the same question. So I was, I was always thinking about approaching to VC. I'm always looking for feedback, but it's a little bit hard to, everyone has different preference of what they like. Some people like really short emails. Some people want really long presentation. So I was just curious about your personal preference of how you're approaching to get some advice about how to run our business. I'm personally running a robotics educational company, and we've been going through a lot of different, basically I'm looking for advice all the time.
As Tim said earlier, part of the test from an investor perspective is to see if you have the capability and the network to find a way to get to somebody that knows me well, okay? And so if you do your research and if you look up at Tim's profile or my profile, you can find potential commonalities with people that know you and know me. And so that's part of the test. Now, that's one way to do it. The other way to do it is what you just did. So you actually stepped up and asked a question in a very large audience. I'm going to remember you. Tim is going to remember you. And so if you want to talk to us after this, then we'll be happy to talk to you, and we'll remember that you've been working on a robotics company, which both of us are interested in. Okay?
And my other advice is you don't have to worry about writing really long business plans with detailed projections, because at the really early stage, like I said, most investors, we don't read through all of that. We're more concerned, what is the basic idea, and then who's the team behind it. That's the most important part you can lead with, is why this team has unique talent to do that thing. Thank you.
Thank you very much. We're done.
I guess they turned off our mic.
All right, I think we're done. Thank you so much for your participation. Really appreciate it.